Hello, everybody. I'm Mark Sebastian, your only option. This is the Ticker Highlight Show. I'm joined by the Queen of the Candles, Leisha J. Leslie, and of course, Andrew T. Giovinazzi, the Viking of Volatility, the Vicar of the VIX. And this is our Ticker Highlight Show. We are going to be looking at Taiwan Semiconductor. Now, how many of you would be interested in meeting me, Andrew, and a whole slew of guests live and in person and trade with us for 3 days and party and have a good time as well? Along with, I think some of the best speakers that you're ever going to meet. It's if you like trading, you like volatility, you want to learn some tax strategies. I've got some of the best speakers that you're ever going to meet coming. Plus myself, Leisha, Andrew, Vaz, Frank, the whole team. If you'd like to join us, you totally should. We're going to hit up a Cubs game. I'm going to take you on the floor. We're going to have a nice dinner at Gibson's. We'll do happy hour at series, and then we're going to do a bunch of trading as well. We'll probably do a fun live mock trading class. So you're going to have a good time. If you'd like to join us, it's July 22nd through the 24th in Chicago. And it is, so fun. You're going to be happy that you went because you're going to learn a ton. We're going to trade. We're going to make some money while we're there. And you're going to get to attend just an all-day trading event. If you'd like to join us, I've just dropped the link. And we're going to have ourselves we're going to have a really valuable, meaty conference, but you're also going to have a great time. Speaking of the opposite of what's going to happen in Chicago, how about Taiwan Semiconductor? Reports good earnings, had a really nice run. Like, look at this. At the beginning of the year, TSM was $100, less than $100. Topped out near 160 and is now pulled back $30. Call it 20%. That's a pretty strong move. And what's worrying is Taiwan Semiconductor is the output machine of AI. All right. So a lot of the chip manufacturers aren't actually manufacturers. They design, they build prototypes, they do all kinds of fun stuff with chips, but they don't actually make them. Most of the chips are actually made by TSM. Intel makes their own chips. I believe Apple makes their own chips. But like AMD and NVIDIA, they lease this out. And if Taiwan Semiconductor is coming in and saying things are a little soft, you add that to the fact that rates aren't going to be cut. And now you have a narrative for why we've been selling off. And when I look at the fundamentals of TSM, PE at 25 for a chip maker, that's nothing, right? AMD coming in at a whopping 280, and that's after getting clipped by $40. And NVIDIA, everyone's favorite, despite the 200 plus point drop, its price earnings is 64. So you're saying, Mark, that's rear looking. Yes. But, I want to put things in perspective. And so TSM selling off is worrying if you are looking at the AI trade. And part of the reason why, you think the Qs have been bad? SMH, holy, SMH has gone to SMHE double hockey sticks, dropping from 240 down to like 199. So it's down a really good portion, buttressing up against the 100-day moving average. So, the thing with Taiwan Semiconductor is you have to ask yourself, okay, where they fit in the channel, if some of these other chip makers come out and start blowing the doors off again, right? NVIDIA comes in and crushes it. AMD comes in and starts crushing it. That's telling you that TSM is a really interesting buy because TSM is going to make their chips. And that is, where I think a lot of these decisions. For me, looking at kind of the fundamentals, I don't see a strong buy or sell. It's kind of a hold. If it got down to if it gets below 120, I think it's worth pecking at. I don't know if I go whole hog, but on a, going out 2 years, this thing can trade into the 60s, but mostly over the 2-year period had hung out around 100 to 110. So I'm conviction buying this is going to be, around that $100 level. But I will know whether I want to go seriously long and that this sell-off is wrong when we go to look at AMD and NVIDIA. But short term, I say this is one where maybe it meanders a little bit lower. I think the aggressive selling in TSM from 150 down to 127 is probably over. But I could see a scenario where it meanders lower and then maybe gets a bounce off those NVIDIA earnings. So something that could produce some decay for the next couple of weeks while we build while we kind of figure out which way the winds are going to fly here makes a lot of sense. This is a sneaky backdoor way to get long vol around the NVIDIA earnings and around AMD earnings. And Andrew, I may be dropping a few Easter eggs there where you had to be thinking about while Alicia looks at the chart. So that's my takedown of where it is from a kind of a fundamental basis. I am going to pass this off to our Queen of the Candles, and she's going to break down the chart.
I have to agree with you. Not a bullish chart. In fact, I had written bearish. Now, when you do have this free fall, and what is interesting with this gap lower here on their earnings, it stopped right at the median line. But that didn't stop it. That support was not enough. It has traded lower since then, since that big gap lower. I do have support coming in that lines up with this previous low right here, along with my pitchfork, which comes in right around 123. So that could be a level to watch. And then from below there, it's another 10 points, 113.
That 123 does line up with the 100 as well, which the 100-day moving average is sitting at 121.37. So
yeah,
that's a level. That's a level.
Several reasons to watch that level, right? And in the meantime, when you do get around there, that's when you start looking for the change in trend candle, right? Like today looks like it could possibly become a change in trend. But don't get fooled. You need to wait for the confirmation the following day. There's the weekly. The weekly is not pretty either. The 21 period on the weekly comes in at 122.88. So a fourth good support right around 123 for sure. Several reasons why. But then below there, it could really drop. You have a thin zone here, and those previous highs there come in right around 119. So 123, 119, 113. And then on the upside, the median line comes in at 130, 133 for resistance.
All right.
Our RSI and MACD are still negative.
Yeah. So we're targeting like that 122.5 area. And on the upside, we're targeting that 135-ish area. So Andrew, if I wanted to be collecting decay for a couple of weeks, but also wanted exposure to longer term vol, is there a strategy that fits this approach?
No, so I was kind of torn here. If I share my screen, so let me tell. I want the folks to kind of chime in.
So remember, you have to share, unshare, share.
I think is it. Can everybody see my screen now?
Not yet. You got to unshare and share again.
Oh, all right. Off.
You just unshared yourself.
No, on. Share screen. How's that?
Yep. Now we see it.
Okay. Well, I was kind of torn here because I find this interesting, right? So you kind of had your run from the top here in TSM, right? And we're sitting here, but the current vols would have been 6-month highs. So volatility is not as low as it appears to be. Like, at least in this name now, VIX is elevated, but it's not like a total layup here that volatility holds up. So that would be door number one. Is it's not near as high as it was, but in another period, this would have been a relatively high vol where it is for TSM. So, like, from an option buying point of view, I'm not quite sure. From as far as now, normally I would say after earnings, you like the calendars, but I would expect volatility to be in the 20s. Not the 30s. So, now we could see what the cost is. So like door number one would be a calendar. I mean, if we were down in the 20s, I would have no problem at that point. Again, because you have the dollar risk of buying your trade. The second part was like, I was looking at some of these May butterflies. John saying I have a June 30 quarter put spread on in this one. I didn't think they looked too bad. Like, I was looking at a May, you could buy the May 25, 20, 15, which kind of gives us to Alicia's thing for about 50 cents for a 5-point fly. Now, the thing is TSM out to May is pricing around $10. Now that makes the fly a little tougher for that close. The 25-15, 105. Let me see here. If I go down to there and I go TSM. Now, I think these flies are pretty. Now, again, I'm curious to what everybody thinks about this, but I have like the 25, 115 down into the Alicia's area there, and then 105. So that put butterfly is $1.84, relatively light delta on that. So the question is, if you think vol is going to hold up through earnings and through the tech earnings, then you might want to buy. Then you're looking for a calendar. But do you think vol's falling down through the tech earnings, which I think is possible? Then I would opt for the put fly, because at $1.87, it's a relatively inexpensive trade. And that's kind of where we're now placing the hedge on a fly, placing a hedge or the calendar. Let me price a calendar now too. So a lot of the big tech earnings are next week. So if we can get like maybe back into some very cheap flies here, like let's say, I think Alicia was talking the 120 level. So if we're looking around 120, We're selling the 85. The 20 puts it 80 something cents, 83 cents. And so 90 cents for those put flies. Again, we're looking at for a $10 range in TSM. So that's 117 or 140, 137, right around this. So the range is pretty good. So I would have no trouble with either. Again, I'm somewhat ambivalent, although I like the butterfly just because it doesn't have that huge Vega component. Because I think the volatility is kind of in the tweener area, but I'm curious to what Mark and Lee should think about that. There you go.
Yeah,
That is my take on that currently.
So what I would say is pull up NVIDIA implied vol.
Okay.
Which an NVIDIA reports on May 22nd. And that'll be your answer as to why the vol is so high.
So I think, and I'm not disagreeing with you, by the way, that vol has a good reason to stay up until at least
minimum AMD, probably NVIDIA.
Yeah.
And
what are their AMD earnings?
AMD earnings are next week. And look at that vol.
Yeah. Sky high.
Right. So, and these are the like huge clients of TSM.
Right.
So
TSM reported decent earnings. So what would you say, like 120 calendar? Like
I was looking at a double calendar and then get left the strangle or keep rolling the calendar until we're done.
Okay. We could do like a 20-30 double calendar.
That is what I was thinking.
Okay. All right. I'm picking up what you're laying down. So we would do like I would say the 20-35 calendar. We could probably do that for $1.50.
That's, yeah. I think that's cheap.
Because that
you would do like the
earnings.
You want those NVIDIA earnings. So in TSM, you're going out and getting May 31st or May 24th. I would probably gear toward the 20. And you get dollar strikes, which is nice.
Right.
So
and you could also, you don't have to hold it all the way. Just the fact that we have this calendar on.
So the 120 puts are 2
2.25.
Yeah. Well, for May 31, they're like 250, 255. Right. And the 35 calls are $3. And then if we want to sell May 3rd against it,
hold on here.
You're getting 90 cents on the put and 95 cents on the call. So you're paying $5.50 and collecting a $1.80 for a 1 month strangle, for a 1 month calendar, which is pretty cheap, right, from my perspective.
Now here is
all credit.
So door number 2, because we have the 22nd. The May 24th 10 mark is $2, $2.05 for the double calendar. Selling the May 10 and buying the May 24.
Oh, well, you do run in. I mean, do you want to be short the 10th or the 3rd?
Oh, okay. Yeah, the 3rd's probably easier.
And we can roll back if we want.
Right. So let's sell the 3rd. So the May, 3rd and wow, there's actually that strangle is still $1.80. Yeah,
that's what I was saying. You're going to get $1.80 for that strangle, and the May 24, 120 for 2.25, and the 135s for 265.
And you've
got 480 versus 180. You're paying $3 for that strangle. Or for that double calendar, and that works.
Yeah. All right. So now, I like this. There we go. All right. So the idea here is, let me see here.
We're basically getting long NVIDIA earnings via the back door is the way I think about it.
I think that is a good way to represent it. What is it? April 22nd today?
Today is April 22nd.
All right. So it's going to look something like this.
Oh, you know what, Andrew? It's a palindrome day. 4/22/24.
Okay, so here we go. So when first day of the calendar,
you don't care about the palindrome day, do you?
We could either sell the 10th or we just close the double calendar, Hogan. So Mark's point with this, which I agree with, is it's going to be very hard for the volatility in this May 24 cycle to go down while we're waiting for NVIDIA earnings and how it could pull chips.
Yes.
So this volatility, these options are going to stay bid.
And as I stated, it's palindrome day. So this is the perfect trade for a palindrome. Because you've got the same position on both sides.
Both option pit and OP2. So you should get the notifications for remember this app. The ticker highlight show, all we do is put the trades that we're doing out. We don't follow it. This is like it's a free service for everybody. So we don't put out
what we do.
It's just we're explaining our process for putting trades on.
Yeah. So let's get into this trade. We're selling the May 3rd 120 135 strangle, and we're buying the May 24th 120 135 strangle. This is going to allow us to basically get the carry the May 24th. And if we want, we can roll after these May 3rds decay down. We can roll back. We can sit on the strangle. There's lots we can do with them. So
the ship's horn just sounded.
So that is what we're dealing with. And the double calendar, very rarely do I love these things, but I think this is the one time where it is the perfect position.
Yeah. Plus, you have pretty decent volatility in the short term, so it's ideal.
It is ideal.
It's as good as a double calendar position as you could look at. So let me get this to Christian here.
And we'll make sure to get that trade out to you guys. Again, you're selling the May 3rd 120 135 strangle, so selling the 120 put and the 135 call that expires on May 3rd. I'm going to bring
this up and toss for everybody here, if you give me a minute.
And you are buying the May 24th 120 and 120 put and 135 call.
I will. I'm gonna write it out here. I thought toss would come up quickly here, but it's not. So.
Well, we're running up against it. We'll make sure everyone sees the trade. One more time, I just want to remind everybody, if you missed it, you got to join us in Chicago, July 22nd through the 24th at the SIBO's World Headquarters. We're going to take in a floor tour. We'll do a mock trading session. We're going to go to a Cubs game. I've got a just incredible group of speakers coming. Noel, trust me, you're going to want to hear Noel. Scott Nations from Nations Index is going to talk about vol and skew. Jim Carroll's he trades the volatility ETPs. Mike is an option-centric wealth advisor. We're going to do some radio show. Matt and Mike Thompson are VIX traders. Bill is commodities. Russell, of course, Dr. VIX. He's going to bring some new research to us. And I've got a couple of, and that leaves out that it's me, Leisha, Andrew, Olivia Vaz, and Francis J. Gregory as well joining us. So you can join us in Chicago for the event. And as a reminder, pros, that if you're a member of Option Pit Professional, you can join the VIP conference for the price of a general admission ticket. Just a reminder. So with that, it is 10:57. We've got to bounce. We wish you guys a wonderful rest of your trading day and a wonderful week. So for Andrew T. Giovinazzi, the Vicar of Volatility, and Leisha J. Leslie, the Duchess of the Doji, I am Mark Sebastian, your only option. We hope you have a good one.